From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 14th, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will look for entry and exit opportunities as we go throughout our week. Let's get started here on the USDCHF, the US dollar versus the Swiss franc. We're looking at the daily time frame. Over here at the right-hand corner of the chart, we have been studying this black box over the past several weeks, and as you can see, we were stuck inside this range, inside this period of congestion, inside the black box, finding support into the mid-9800s, resistance up towards the parity level, the 1.0 level, and the pink shaded area at the top. We've been bouncing around in here for several weeks. We saw last week an attempt to break out, getting above the 1.0 level on news, pressuring higher all the way up into the 1.0090 level, and it turned right back around rapidly, getting back underneath the 9850-60 level, pushing all the way down towards 9800. Today, we see the market opening a little bit lower than the close on Friday, and now pressuring back up towards the 9860s and 80s. Purple shaded area today will be a key point for the day today. If it stays underneath it, then we look for the continuation lower. Historical supports here obviously represent a potential resistance into the same area, all the way up into the 98, 85, 90 level, the purple shaded area. As long as it stays underneath it, there's potential for the continued fall back down to the orange zone, and of course under the orange zone, we're back down towards the mid-97s and the yellow shaded area down here. If it breaks back above the purple zone and we start to see the buyers come back in, pressuring back up towards the 9900 or even the parity level is a possibility. So key level to watch will be this purple shaded area today. Take it down here towards the 4-hour time frame. We've already seen a little bit of resistance late last week here into this purple shaded area. That's what I would suspect we're looking for today. We're looking for resistance into this purple zone underneath the 98.85 level. As long as it stays underneath there, the possibility of falling back down to the orange zone is something we'll be watching for. Any pushback above 98.85 and even as high as the 9900 level, we'll be looking for it back higher. Once again, back here towards the green zone, or like I said, even as high as the parity level, all the way back up here towards the pink shaded area. One quick Fibonacci retracement measurement from last week's high down to the current low on the chart. We find the 236 sitting right here at 98.70, basically where the current market price is. 382 is once again back up here towards the green shaded area, 99.13. So short, if you're looking to sell this currency pair and go short, you're in that area that provides a fairly low risk, high reward opportunity. You're going short here underneath 98.85. Stop losses are above it. Of course, green shaded area could be a little bit more aggressive. Your stop losses above there, targeting the orange shaded area or even back down into the mid 97s for the US franc today. Moving on over to the euro dollar, just the opposite, of course. Over the past several days, we saw the dip down here to the green zone, the rise all the way back up here towards the 112 level, and now falling back a little bit into the 111 level once again here into the purple shaded area. This area right here, highlighted in purple, will be your main area to focus in on today. We do see the 200 period moving average down here. That's the green line coming in on the chart. 200 period moving average sitting right here at 1.1045. So any dip lower could even see it challenge that blue zone and the 200 period moving average as our next support. So we'll be watching that. Of course, closest area is this purple shaded area for the day today. 11100 is the purple zone, 11045 or so is the blue shaded area. Both of those offering clues to support on the current rally that we've seen, and of course the pullback that we're seeing right now. Opening a little bit lower today than it closed on Friday, but definitely something to watch as you're challenging these two support levels. Blue shaded area though, 110.45 I think is more significant than the purple zone. The 110.45 level, we have Fibonacci there, the 200 period moving average, and these historical resistance over here where the blue shaded area is. 4-hour time frame, you can see the support here into the purple zone, just the opposite of what we were just looking at on the US franc. But like I said, I think the blue shaded area down into the mid 110s carries a little bit more weight because of that 200 period moving average and some of the historical levels of resistance that you see over here on the left hand side of the chart. Anything underneath that blue zone, we could be looking for a full retracement of the move last week. Of course, the yellow shaded area is your closest resistance. That's 111.80, 11200. Anything above there, we look for the continued rise for the euro dollar this week. Moving over to the GBP USD, Great British Pound versus the US dollar, we have been in a downtrend for quite a long time. The blue trend line represents that. Last week we pushed a little bit above that blue trend line, but I don't think it's out of the question that we still could see a return to the downside because we haven't broken the last major high that you see right here where the blue trend line connects. So as long as we're underneath this high, basically the highs of the black box, I think we could still see a return of the downside here for the pound dollar. The rising red trend line, you can see what happened the last time. It had a significant rise, broke back underneath the red trend line, and returned to a new low. So if it ever pushes this week underneath this rising red trend line, we could be looking for a return of the long-term downside here for the GBP USD. Zooming in a little bit here on the daily time frame, you can see the resistance here at the blue shaded area today and what we saw late last week into the 1.4350 to 4400 level is that blue shaded area. Look at the blue box back here. You see a lot of resistance there as well. So unless it really breaks above the 4400 level, we could still be looking for resistance and maybe a pullback at least to the green shaded area down here, which is all the way back down towards the 1.4270 level. I think if you're going to go long, that makes the most sense. Wait for it to come back down here towards the green zone, 4270 or so, and then you look to go long. You just don't go long at the very top of the trend. If you're looking to go short, however, the blue shaded area is becoming an attractive resistance zone for the GBP USD. Take it down to the 4-hour time frame. You can see already we've seen some resistance here today and coming back a little bit underneath the 4350 level. Not an open and close underneath it by any means, but definitely something to watch. If it gets underneath 4350, a fall back into the mid to upper 42s is a good possibility here for the GBP USD. And you can see the red trend line that we were just looking at a few moments ago. Anything above that blue shaded area would likely begin the next phase or leg of the uptrend for the GBP USD this week. Moving over to the US CAD, of course, this pair has been in a pretty decent downtrend, the red trend line representing that. We've studied the downtrend pattern, these black boxes on the chart. We've been studying that in the daily trade room. 4-hour time frame, take a look at that long-term black trend line. That's important information, I think, as we look at the market today. Long-term black trend line coming all the way from 2014. Why is that important? Because as we get back down to the daily, that's where we are. We're waffling around that long-term black trend line and have been for the past several days. Of course, oil prices will likely be a key factor here. If oil suddenly decides to take a fall off, we could see this rally back higher again. If oil continues to go up as it was last week, we could be looking for this to continue to go down. Take it down to the 4-hour time frame, of course, at least for the day today. The easiest thing to note is that we are underneath that green shaded area, the 32.4570 level. The last support lows that we see here, zooming in one more time, you can see these last support lows. We're underneath that today. I think if you're doing anything on the US CAD today, it would be more likely selling underneath the 32.4570 level, looking for the target back down towards the yellow shaded area, which is down into the 31.70 level. Risk is fairly easy to understand here. You just don't want it to get back above that green zone. If it does, then we're probably back up here towards this orange shaded area up here into the low to mid 1.3300. So green zone is your key area to watch for the day today here on the US CAD. Under it, falls back down and continues the downtrend that we've been in. Above it, we start to look for some retracement. Keep an eye on those oil prices. It may give you a clue to direction for the US CAD. Moving over to the US yen, we've been stuck in a range here for a little while now. I think it's possible that the buyers are building into long positions here for the US yen, but definitely we'll keep an eye out for opportunities for this to go short as well. But we've been stuck in this black box inside this range for quite a long time now. Zooming in a little bit here, just staying on the daily time frame. The yellow shaded area at the top of the black box is 114 and 114.30. Underneath it, the potential for reversal to go back down is there. and we've already seen that so far for the day today. We've already come back down into the 113.60s. 113.45 to 20 is our orange shaded area. It's kind of a hinge point, if you will, for this currency pair in the middle of our range that we have highlighted with the black box. Anything underneath that orange shaded area, we'll likely look for it to turn back down towards the green zone at the bottom of our range. At some point in time, later on into the future, we'll either see the breakout above the yellow zone for the turnaround and the turn back higher for the US yen, or eventually underneath the green zone, we look for the continuation of the long-term downtrend. So definitely watching this range for trading opportunities. 4-hour time frame, zooming out a little bit, you've already seen the fall off of the yellow zone, so no real opportunity to go short yet for the day today unless you went short up at the yellow zone. Getting close to the orange zone. Remember last week and the week before, we were looking at opportunities to go long at the orange zone. Back here, you can see the opportunities to go long targeting the yellow zone. If you're going to go long, look for it to dip down here into 113.40, 45, even down into the 30s. Like you see back here on the left-hand side, we made good profits targeting back to the yellow shaded area a couple of times here. So if you're looking to focus your efforts long, let it dip down into the orange zone like it did back here. That becomes your opportunity. You know the risk. The risk is that it breaks underneath 113.20 and goes down to the green zone. So if you're going to go long, look at the orange zone, maybe the green zone, or above the yellow zone. Going short, the yellow zone really is your very best opportunity. Maybe underneath the orange zone are your two opportunities to go short on the US yen this week. Moving on over to the AUD-USD, of course, this currency pair has been in a strong uptrend for the past several weeks. Nothing really to point to a change of that attitude. So if we're going to go long in the direction of the current trend, we want to watch for dips into support to give us our very best opportunity. Zooming in a couple of times here, and you can see the one, or sorry, not one, but 0.7485, the orange shaded area, was resistance 1, 2, 3, 4 times. 4 daily candles finding resistance into that orange zone. That becomes our first opportunity for support here for the Australian dollar. Let's take Fibonacci, a very short fib from the low of this leg of the uptrend, right from here where it touches the blue trend line to the current resistance high, puts the 236 right at the orange shaded area into the 74.80s and 70s. If I was to take fib from the lowest low on the chart, it's very possible that we find some fib a little bit lower, but I like this, the fact that we have some overlap here into the orange shaded area. 4-hour time frame, clearly that was resistance back here. That is your support. If you're considering any opportunities to go long, that's more likely the place that you're going to consider doing that, down here towards the orange shaded area. Going short and looking for opportunities for a reversal, obviously your lowest risk, highest reward opportunity to do that is all the way back up here to the pink zone. So going long, you need to wait for it to go down. Going short, you need to look for it to go back up to give you your lowest risk, highest reward opportunity. At the current moment, right between the orange and the pink shaded area, I don't think there's a trading opportunity unless we dip to support or rally to resistance before you look for a new opportunity to trade the Australian dollar today. Moving on over to the Nzdusd, we saw the cut of interest rates last week out of New Zealand, and of course it took a significant fall off of there. Then we saw a rally into resistance. Last week I spoke about potentially selling the pink shaded area as it rallied into the 67.40, 67.65 level. If you decided to go ahead and jump on into that, then you're into profit now. If you sold it into the pink shaded area, you should be protecting profit if you did that. Targeting the orange shaded area, I don't think there's any reason to believe any of that has changed, but definitely protecting profit. If you're going to go short, you of course need it to go back up to the pink zone into the 67.40, 65 level before you go short again. If you're going to go long, I don't see there any reason to go long. There's no real evidence, fundamental evidence to go long. So at this point, I don't have any suggestion to go long. Support will be here at the orange zone, underneath there, back to the yellow zone or lower. Of course, we've also been talking about the longer term outlook here at the black box. Taking it out to the weekly time frame. Take a look at this. You see red circle on the left, 3 weeks finding resistance where the red circle is. Blue box in the middle, 3 weeks finding resistance where the blue box in the middle was. Now we're over here. We've seen a couple of weeks at resistance. So again, as I said in the live daily trade room last week, as long as we're up here close to the top of the black box, the blue shaded area, I don't want to go long. More likely looking for opportunities to go short. So we've already seen it, and looking for the continuation lower is what I'll be doing 4-hour time frame, zoom it out a little bit here. Again, the opportunity to go short was the pink zone. Don't go short on top of the orange zone, but a breakout underneath the orange shaded area could give us an opportunity to go short once again for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.